I get asked about Tesla probably more than any other stock. And in the past, I've never had a great answer, since when I'm personally researching the company, it only takes me about 5 minutes to realize that it won't fit into my portfolio, considering my style of investing. At the same time, I cringe when I hear or read many others' recommendations and comments regarding Tesla shares. I think they're missing some critical considerations. So I decided that it was about time that I dig in my heels and I take a deep look into Tesla and I put my opinion out there. Whether you're considering investing in or short selling Tesla, or are just trying to learn how to properly conduct your own thorough analyses of all different companies, I hope this video helps. Hey there, my name is Steven Spicer, and it's my goal to help you invest smarter. And if you like deep stock analyses, then hit the subscribe button and the notification bell so that you don't miss a thing. Tesla stock has been a swing trader's dream over the last couple years. The bull and bear camps are so diametrically opposed to one another and vocal about their opinions that as they alternatingly are able to fill the masses with either euphoria or panic, the stock has a tendency to swing wildly up and down. When it's down, I see the bulls going on and on about how the stock is so obviously on sale. And when it's up, the bears are doing the opposite. I don't think it's quite so cut and dry. I also see fellow YouTubers and other influencers in this space making the common mistake of thinking a good product equals a good stock to own. Do you remember this video that I did on this blender? Just because it's a good blender, that doesn't necessarily mean it's a good deal. You can't know that without knowing the price and comparing that to the value that it will bring to you. That's true with Tesla. You can go on and on about how great their products and their ideas are, but that doesn't necessarily mean it's a good buy. I think both extremes, not even the extremes, I think anyone who axiomatically plays this investment, thinking that it must go up or it must go down, is wrong. There is a legitimate case for both sides. So I'm going to take you through what all Tesla is today, the way that I chose to value the company and why. I'm going to walk you through some of the biggest bear concerns. And finally, I'll share with you how I would trade it, how I would invest if I chose to do so. But first, this video is brought to you by my insider community. I'm leaving off the ads and through the end of the month for that reason. I would love to do more stock deep dives like this with you, but time is my issue. With my personal practice and my real estate and the trust that I manage and my family and trying to crank out some free content for you and sleep, I found myself unable to provide you with everything that I'd ultimately like to. But I realized that if there was enough support for these weekly stock deep dives, enough people interested in paying $19 a month to be a part of it, then I could just offload some of the other things that aren't my expertise anyway, like video editing, for example, that would free up the time I need to properly do this research. Well, I've gathered enough support already, so it is happening. So if you're interested in being a part of it, you can send me a direct message over on Instagram. We can chat about it, I'll answer all your questions, or you can find the link directly in the description below. I'm going to close the doors at the end of May so that I can focus on the research and not have to worry about selling. I'll give you more details about everything we'll be doing as insiders at the end of this video, but for now, let's get back to Tesla's deep dive. Most of you are familiar with what Tesla is. Right now, the biggest thing they have going for them is their automotive segment, their electric vehicles or EVs. But they're also dealing or have talked about dealing in solar power, batteries, robo-taxis, insurance, data collection, and semi-trucks, and I'm probably missing something else. We could spend a lot of time extrapolating some super rough projected valuation models for each of these segments, but I don't think that's a good idea, at least not at this point. Realistically, most of these are a ways from coming to fruition, and when we get to the bear concerns, if those aren't addressed, these segments won't really matter. Again, at least not anytime soon. It's the EV story right now that could make or break Tesla. So for me, when I'm trying to determine a valuation for the company, that's what I'm going to rely on. I wouldn't totally ignore those other segments, but I'd wait until there are some fundamental changes before actually factoring them into any sort of fair value calculation. So I acknowledge them. They're just bonuses for me right now from a valuation perspective. And real quick, before we get into the actual numbers, I do have to say that I am also a practicing registered investment advisor. So it's important to me that you understand that this is not in any way a recommendation. I don't know your particular circumstances. You should definitely conduct your own research and analysis before investing in any stock to decide if they fit your portfolio and make sense for you specifically. I hold no position in Tesla at this time. Okay, so let's get into a bull case valuation. I won't invest in anything unless I can determine a fair value in which I am confident. The more assumptions I have to make, the less confident I become, and the more that stock would become a speculation, in my opinion. Now, I prefer to come up with a fair value price, a calculation of what a company might be worth to me, using the company's financials. Unfortunately, that's not realistic with a company like Tesla. You can't use earnings right now because they're negative. And even when they had a positive quarter, one quarter, even 1 year often isn't enough to determine a reasonable valuation. They also have significant negative cash flow. I'm not saying that all of this is uncommon for high growth companies, but it does complicate the valuation process, which is one of the most important parts of any analysis that you're running. It's also the part that most investors in this stock seem to be missing. I hear all these reasons why Tesla is amazing, but very little talk of what all this amazingness is actually worth, to determine how that compares to its current price today. And even less discussion of any sort of justification for evaluation. So let's come up with something reasonable so that you can at least feel somewhat confident in your assessment of its fair value. And if you can't or don't feel confident in your attempts at valuation, whether through the process I'm about to take you through or through your own methodology, then you probably shouldn't invest. And that's true for any investment. Think about it. If you don't know what the stock is actually worth, then you never know where you stand compared to its fair value. You'd just be gambling. What made the most sense to me was to explore their potential in the EV market. That's where they currently have the greatest foothold. And I think a realistic case, a reasonable case, can be made for their future there. Whenever I'm looking into the future, thinking about potential earnings, I don't like to look much more than 5 years. So much can happen in even 5 years that I don't feel comfortable extrapolating beyond that point. So by 2025, Bloomberg projects that there will be around 10 million EVs sold globally. Now the question is, how much can Tesla realistically capture? There are bulls who will argue that Tesla will capture most of it, but I'm not convinced. There are 3 major regions that will make up the vast majority of EV sales between now and 2025: the US, Europe, and China. In the US, maybe I could buy those arguments. Tesla seems to be pretty far ahead of any local competition. The technology that they're using in their battery has been revolutionary, allowing for significant improvements to their overall performance. And other than the occasional battery explosion, there haven't been too many complaints. But when you look abroad, I question their ability to dominate. The EVs currently being produced by European rivals are already much closer to being able to compete on performance metrics. And although the Model 3 launch in February was met with euphoric buying all across the continent, that enthusiasm seems to have quickly tapered. I mean, they're still doing just fine over there, but they seem to be pretty far from any sort of total EV market domination. And then in China, I have even more concerns. For starters, there's a lot more direct EV competition over there. Companies like Tesla, whose primary focus is electric vehicles. But add to that the government's power and influence in business in general. I just wouldn't be surprised at all to see that power used to domestically tip the scales in favor of a local rival. I'm not saying that it will happen, but just that it is far from an inevitability that Tesla will win out entirely over there. About as bullish as I can bring myself to see as a possibility would be to say that they continue innovating over the coming years, and by 2025 have captured half of that market. Now, there are a lot of optimistic assumptions going into arriving at that figure, but I at least can see it as possible. So I'll use this for my high-end bull case scenario valuation. So here are the rest of the assumptions I'm going to use. Tesla captures half the market by 2025, selling 5 million cars in that year alone. 90% of those models are their low-end models averaging $40,000, with the remaining 10% being their high-end models averaging $90,000. I'm assuming they achieve their profit margin goal of being in the mid-teens, so I'll say 15%, but again, that's an optimistic assumption. And we'll go with an average tax rate of 30%. With these assumptions, in the year 2025, Tesla would profit about $25 billion after taxes. Now, if we assign a high-end auto industry multiple of 6, Tesla would be worth $150 billion in the year 2025. Now, if you just discount that number back to today at an historic S&P 500 return rate of 8%, you're left with a fair value market cap today of around $95 billion. And since we're talking about future earnings here, I also plugged this into a discounted future earnings calculation. I just plugged in the consistent growth numbers that would have to happen starting from about 0 today in order to get Tesla to that $25 billion in earnings number by 2025. Discounting each of those cash flows over the years plus a future value of the company back to today left me with a $115 billion valuation. Now, even if you think some of those assumptions were on the high side, remember all the auxiliary business segments that I am in no way factoring at this point. They're bonuses for me if they play out and allow me some wiggle room on my bullish projections. Now, I love to see a stock that has at least a 100% upside based on realistic calculations. So once again, I find myself with some wiggle room as this calculation has turned up an upside of more than 200% from where the stock is today as of this recording. So before I move any further with any upside calculations to try and improve my confidence level in my valuation methodology, maybe to look at it from a few different angles, if I could find any, I want to see what the downside looks like. Because I think I can work up a reasonable case for the upside, check. But if the downside is too great, if it's more risk than I'm willing to take on anyway, then it doesn't matter. I can already rule it out. It won't make sense for me to waste any time digging any further on the upside. So let's explore some of the biggest bear concerns. Now, the biggest of all of them, and setting the tone for everything else I'm going to outline here, is their financial situation. Their debt level is rather high, and they're burning through cash at a rapid pace. So far, they've been able to secure funding either from bond offerings or by diluting current shareholders. That's issuing, selling more stock, thus decreasing the value of every existing share. There are a lot of deep-pocket investors who share in Tesla's vision, but even that will only take you so far in supporting your debt. Even if the financial state of the world continues fine over the next 5 years, I'm not convinced they'll be able to secure all the money they need for all the irons they currently have in the fire. And after reporting their most recent quarter, they seem to be a ways away from any sort of dependable and sustainable cash flow to support it. But I'm even less convinced that the financial state of the world, as I mentioned earlier, will remain stable. I have no idea when the next financial crisis will hit or exactly how it will manifest, but I'd be surprised if there wasn't some sort of financial shakeup between now and 2025. And during times of chaos, liquidity dries up. Investors flock to safety, making them much less likely to invest in the bonds of a highly indebted, cash-burning corporation, no matter how much promise they show. If that happens, as crazy as it may sound to a Tesla bull, bankruptcy proceedings could realistically be in their future. Banks that have loaned them money would not be anywhere near as forgiving or as patient as most Tesla shareholders. Again, I'm not saying this is likely. Instead, I'm observing that it's definitely within the realm of realistic possibility. That's why it drives me crazy when I see influencers saying, oh, you can get Tesla for 40% off right now, because it's down 40% on the year. It's like they're totally ignoring the reasonable possibility of a bear case scenario playing out. I'm not saying they have to be bears. I'm saying that both a bull and a bear case can exist in the same reality. And making a habit of picking one side and entirely ignoring the other is an ultimately ruinous strategy. And I'm not saying that stocks don't go on sale. There are stocks that do go on sale. If Disney, a company that we covered in depth a couple months ago, were to drop by 40% over the next 6 months, for example, and have the same fundamentals it has today, yeah, I'd say that it's on sale. Based on those fundamentals, there's not a reasonable case for it going much lower. The downside is limited, but that's not at all the case here. So let's look at a few other negative indicators that stood out to me, things that might suggest there are more problems than we know. And then I'll move into how I'd recommend you play it if you do decide that a long or short position makes sense for your portfolio. I always like to look into insider transactions, purchases from insiders, those who understand the company better than the average shareholder, can be a solid indicator that a stock is in fact undervalued, right? They are the closest to it. They have insight as to what the future holds. So if they see the stock as promising, well, that seems like a logical place for them to put some of their money. Now, over the last 3 months, there have been 15 purchases from insiders and 35 sales. Now, before you get excited about the number of purchases, you should know that all of those, except one, were options being exercised around $30 per share. They were exercising those options, purchasing shares at around $30, and then immediately selling them at around $300, $270, $240, and so on. The only real insider purchase was from Elon Musk himself. And then you got the 35 insider sales over that quarter, which aren't necessarily a negative indicator. You never know what they might be using that money for. But it at least doesn't leave me feeling too great to see so many shares being shed by so many different insiders. And speaking of insiders, it's hard to ignore the volume of executive level staff leaving the company. It's anyone's guess at this point as to the exact reason that's happening, but it's rarely a good sign. Specifically, there have been 27 officers leave since the beginning of 2018. They've been from all different positions, but the ones that stand out to me are those that have to do with anything financial or legal. In March of last year, their chief accounting officer, as well as their corporate treasurer and vice president of finance, left. Just 6 months later, their new chief accounting officer left. In October, their vice president of worldwide finance and operations left. Then in November, it was their vice president in the legal department. In January, and then again in February of this year, 2 general counsels left. And then in March, their CFO left. Again, I have no idea what the specific reason is for this exodus. It could be coincidence, sure. But there are also a number of probable explanations that, as a shareholder, should be concerning. Finally, you have Elon Musk himself. He is a volatile visionary. He is changing the world. The company wouldn't be what it is today without him, but I'm also afraid that to pursue his vision of changing the world, he might be pulling the company in too many different directions. I mean, they have a great product, the Model T of the electric vehicle. Henry Ford spent forever optimizing and improving the Model T. He refused to spend any company resources on anything else for a really long time. I wonder how things might be different for Tesla's financials if they just focused, for now, on their EV. Who knows? And I doubt we'll ever get to find out as long as Elon is at the helm. So for me, with all of this, I'll stay away. Even though I can absolutely see the case for some significant upside, the fact that the potential downside is also so significant makes me stay away. I mean, I doubt it would get all the way down to its book value of roughly $30 per share, like I've heard some bears say. I think someone or some other company would buy it out first. But even then, it would still be a steep discount to today, much more than 50%, which is far past my threshold anyway. So for me, it doesn't meet my minimum criteria. But if you do choose to invest, here's my advice. Don't pretend like the other side doesn't exist. If you're short, acknowledge that it is possible for Tesla to secure the financing it needs to stay afloat and ultimately thrive. If you're long, take some time to understand their financial situation and acknowledge that it doesn't look great, and there's no guarantee that they survive this growth phase. Then, this part's important, mentally and emotionally prepare yourself for the opposite reality playing out here. You think the long case is more likely, so you go long? That's fine, but prepare yourself ahead of time for how you'll react if the stock continues to move against you or if the fundamentals worsen, and vice versa if you're short. Do all of that before you enter your position. I hope this information helps you, not only with your evaluation of Tesla, but with your ability to critically think about and value stocks in general as you go to research and analyze companies on your own. That's why I'm doing these weekly stock deep dives in the insider community. Each week I'll go live and dive deep like this into a stock that was chosen by the community. I'll share with you my entire process and findings, from my valuation methodology to whether or not I plan to invest myself, if I'm watching for anything in particular, if I'd use stocks or some option strategies, if I'd just entirely avoid the company altogether and why, everything that comes from my research and analysis of that company. And then I'll open it up for questions. And my plan is to be there as long as it takes to answer all of them. I get asked all the time about different companies, and if it's not one of the handful that I just so happen to currently be diving into, I don't have a good answer. I can't give you my opinion if I don't know all the facts myself, and there's no way that I can know all the facts at all times about the tens of thousands of companies that are out there. So I'm excited about this format and actually being able to have an educated, research-backed response to most of your questions. So this isn't about stock recommendations, since you'll be choosing the stocks that we're covering. Instead, it's about the process. It's about learning to research and analyze stocks on your own, because every stock is a little different. And I've thought a lot about the best ways to teach how to thoroughly analyze stocks, and that's a daunting task, because there are so many different ways to value all the different kinds of stocks that are out there. It's really case by case when determining how to proceed. So I think this idea of being exposed to different stock analyses, different valuation methodologies every single week will be one of the best ways for you to learn how to do it on your own. So that when you're curious about a stock, you'll have strategies that you've been exposed to and thus able to naturally pull from for your own analysis. So we're starting simple this time with just these weekly deep dives. That's why it's only $19 a month. But as we gain support and I'm able to offload more of those other things that I do that aren't my expertise, I definitely have plans for how we're going to offer more and more to this insider community. And as we do, the price will naturally go up, but not for those of you who are already inside. You'll be locked in. So if you have any questions or concerns, or you just want to chat a little about it, the best way to reach me these days is by direct message over on Instagram. Now, I'm closing this down at the end of the month so that I can focus on research and not have to deal with selling. And I don't know when I'll open it again. It all depends on how it goes. Maybe in a month, it may be in 6 months, I don't know. If you did miss the cutoff, send me a DM on Instagram and I'll let you know what's next. But if it's still May while you're watching this and you're interested at all, hit me up. I'd love to have you on the inside. I wish you all the best. Take care.